So just to kick off, how do you feel about the election at the moment?
Hey, well, there's definitely a mood for change. That's absolutely evident. There still seems to be some undecided voters, but we're just getting the message out. The most important vote, of course, is the party vote, and trying to get people to actually go and vote and understand that. Even after 25 years, it's amazing how people don't actually understand that the party vote is the number one most, because that decides the government.
Yes, it does. And so you think that do you think this is going to be a landslide at all, or is that on the cards, or is it going to be a tightly contested election where Win Peters or someone of his ilk might actually hold the trump cards?
It's hard to tell, but we've probably got a view that a lot of Labour voters won't actually vote.
Really?
Because they probably can't bring themselves to vote for right-wing parties. So obviously, there's a swing portion, and the more we can convert that, but there is quite a large number of undecided voters.
Right.
But everyone you talk to, well, when I say everyone, but virtually everyone, literally, in a seat like mine, is saying that they want to change.
Right, yes.
So that's evident, and I just hope people get out and exercise their democratic right.
Yeah, exactly. So if National gets across the line, what does this mean for you? Most likely.
At a personal level?
Yes.
Well, the big question is, the process is that we go through a situation where we have to negotiate with the party. Hopefully it's only one party, and that can go on. We've seen experiences previously where that's gone on for months. So hopefully we don't have that situation. But if it's a simple arrangement with ACT, for instance, what will happen is there's a horse trading around what are their key priorities, and it's a question of how much we're going to accommodate those in the clear agenda we want to put in place.
Yep.
And then out of that shakes out the ministerial positions.
Right.
And of course, ACT will want some ministerial positions, and then out of that cascades down to actually what happens. So it just depends what that situation looks like and what role I might play in that future government.
What would be your personal preference?
Hey, well, as you probably know, I've got 5 portfolios. I've got what we call revenue, but everyone knows this tax. Brings a smile to everyone's face, doesn't it? So that's quite a big portfolio in its own right. But I've essentially got all the business-related ones, other than some of the ones that Judith Collins has around overseas investment and tech and R&D. But so I have commerce and consumer affairs, which sounds a bit boring, but it's actually things like AML, triple CFA, that's the Netflix one, and I'll talk about this more in detail. So second one, building construction, big industry, and I know we've got certain people in the room who are involved in that sector, big driver of the economy, and of course when you have a downturn where we're losing basically one construction company a day at the moment, that's run rate.
Really?
It's quite a significant industry, and how we can flatten the curve. The variability is the most difficult thing to manage in the building construction sector. So building construction, I have small business, which obviously is a powerhouse of the economy. Manufacturing, which is one I went to back in 2020 and said to Judith, look, manufacturing underpins 2/3 of our exports, employs 250,000 people. The construction sector employs actually 285,000, but I think manufacturing is the next biggest employer of people in New Zealand. And we should have a Minister of Manufacturing, and Chris Luxon's agreed to that. So that's a key portfolio. And so tax, commerce, building construction, manufacturing, small business, those are the 5.
So what would be your preference?
Oh, no, I'd probably end up with a bunch of them if I do get a role. Because what you've got to realise is 20 inside Cabinet, and then there's normally 5 ministers outside, but there's right now, all our spokespeople have roles, and eventually all those got to be squashed together logically with under various ministers.
Great. So manufacturing appears to be a growing industry, growing in New Zealand, and it wouldn't have been. You wouldn't have to go back that far, 30 or 40, when we were underpinned by agriculture. And of course, it's interesting to hear you say today that manufacturing is now becoming a significant part of our commercial sector and a contributor to GDP. And I'm aware that Fisher and Paykel have taken up some land out at Pairata there, or near Pairata, where they're going to build a massive factory, 15,000 employees, which is close, not in your electorate, but close to it.
Very close, yeah.
Yeah. Can you tell us a bit about where you see manufacturing going, where the party sees it going?
Hey, well, first thing is manufacturing is incredibly significant for a number of reasons. Not only because, as I said, it underpins a lot of our exports. And when you think about manufacturing, it has so many different aspects to it. Food manufacturing is one of it, which most people identify. But, I went down to a manufacturing event last week in Hamilton. I'm just remembering the days. And Bill Buckley was there. Yes. Bill is a world leader in doing manufacturing these parts that basically every mobile phone, his face of it's created through his magnets here in Mount Wellington. But I've actually just finished doing a roadshow around the country, visiting 13 regions, and the diversity of the manufacturing and the sophistication of the manufacturing is just unbelievable. And so the importance is not only is it manufacturing and creating jobs, but actually it leads to a lot of R&D, a lot of research and development. That's where a lot of, you think about cutting edge new processes actually comes about through manufacturing and what's been stimulated out of that. And it's a really exciting industry, and the biggest issue with it is how do we attract smart people into it, because there's a misconception it's dirty and ugly and all that sort of stuff. But actually when you go around these places, they're all running really sophisticated CNC machines, and I know we've got a father and daughter at the back here that have CNC machines, but it's people running very sophisticated software that happen to be in a manufacturing environment that they're exporting around the world and competing with the best. And so I've, to that end, as an example, I've convened a group from the Hut and said, well, how can we attract particularly young women into the sector from schools? And now I've said to them, I'm going to run a pilot with you, and they've been working with me up to now in terms of how do we connect schools with training organisations and with manufacturers to try and get people in. But, it's basically an IT business in many ways, a lot of the manufacturing. Lights out manufacturing where you run 24 hours and you don't have to have people. There's a wonderful woman running a factory in Dunedin right now that is absolutely lights out, sophisticated. It's like toys going in there, just seeing these wonderful machines just pumping out these wonderful products.
Wow.
So, that's the excitement. But, it's hidden, and no government's ever said, well, let's embrace manufacturing because you are really, really significant. Not only just, as I said, for those two different main aspects, the R&D, but also the sheer scale of what you do in terms of exports and creating new jobs.
And so when you create jobs, of course, there's a flow-on effect. There's more people come in, there's more housing required, so construction industry benefits out of that. So if you want a good case study, young Jenny sitting over there is a good case study for...
I know, I'm looking at it.
Young women that have come out of school.
And involved in manufacturing, I know. She's a wonderful example.
Yeah, well, they've got a significant operation over there in East Tamaki. There's 60-odd people on the floor, isn't there, roughly, Mike? Yeah. And just growing and growing, and stuff that they make now, sophisticated engineering bits and pieces, go all over the world.
Yeah.
They even make the fasteners for the Rocket Lab rockets.
Yeah.
So some of their stuff goes out of space.
Well, see, what people don't realise, an entity like Rocket Lab, Peter Beck's now got 2,500 suppliers, and as he explained to me, to be a supplier to the rocket industry, you've got to be not only a great manufacturer, you actually need to be even better than someone who manufactures products for human use, medical use. You actually need to be at a step higher, which means you've got to be at rocket level, which is the pinnacle. And yet we've got these wonderful manufacturers all now and suppliers based in New Zealand, all at that wonderful standard. It shows New Zealand can compete on the world stage. And I think the big thing about manufacturing for New Zealand, we're not even going to do the long run special stuff. Our expertise is really smart jobbing. One of the things, getting down to a bit of detail, I want to look at how we can promote short-run robotic welding as an example, because I think that's a real example. That is New Zealand's raison d'etre. We're small-run manufacturers using really smart technology. And we do have quite high-quality welding capability. But, for instance, there's a company in Hamilton that does the house-moving trailers, that the wheels move underneath it and go up and down. I don't know whether you've seen it on TV. They are using short-run robotic welding, and there's a university in Australia called Wollongong, and I'm saying, well, why shouldn't we be having those centres of excellence in New Zealand? Because if that's what our expertise is, why don't we really invest in that part of it rather than just talk about welding as an example?
Absolutely correct. So just turning our mind to revenue a bit, with your revenue hat on, there's been a bit of flack around for the National Party at the moment over their tax incentives and the limited number of people that are supposedly going to get the maximum benefit. But I don't think that's the tip of the iceberg. And can you just flesh that one out for us as to where the tax regime's going under National?
Yeah, well, we're in an election, and if you don't know, at 5 o'clock this morning, we issued a press release with numbers highlighting a $750 million shortfall in the labour cost things, because we think the GST numbers are wrong on food. And so, it's just going back and forth. Hey, broadly, what the purpose of our tax cuts is, if you think about it, just step back for a moment, beneficiaries have had quite significant increases in benefits. I'm not saying it's not easy to live on a benefit, but we increased them in net real terms, and then under Labor they've increased them twice. So beneficiaries have actually done quite reasonably well, if I can put it that way. Superannuitants have also kept in line with inflation because of linkage to wage growth. The one group that we're really worried about is the hard-working mums and dads who are actually out working. And many of them have got children. If you think about them, they're the ones that are most affected right now with the cost of living crisis. They've got high mortgage costs, and guess what will happen to interest rates? Food bills have gone up rocketing, fuel bills have gone up, and so our is that right? Yeah, you're right. Our focus has been on providing tax cuts for them. So just the scale of it, if you're a beneficiary or superannuitant, you'll get $26 extra a fortnight. Right. If you are an average person, if I can say it on sort of average wage, you're probably going to get around $100 a fortnight. And we've always said there is a tax cut of up to $250 for a family. Now, so that's direct money back into families' pockets. What we've also done with families with young children is that we've come up with a package. We want to see them putting their children into early education centres. We want to encourage that. And so we've again provided offering a subsidy, if we get elected, of up to $3,900 for people to have their children in early education centres. To be slightly longer, so basically mums can work 3 days a week or stay-at-home dad. And so that's the big package. So when you put all that together, you're talking, for a family, it could be up to about $5,000 a year. It's quite a significant saving. Yes, yeah. And of course, these things come with huge costs around them. But look, at the top end, there's a smaller amount, but the bulk of people will be somewhere between $26 a fortnight and $250. Right. So, and I tell you what, in Tuakau last week, I was at a lunch for the most vulnerable of people in Tuakau that every fortnight they go there, the community sponsors the lunch and provides it free of charge. And I tell you what, when I said to them, you're going to get an extra $26 a fortnight, they all went.
Yes. Yes, it's
They
significant
said,
for
well
them.
done, and it's significant, right?
Yes.
Everyone liked to promise more, but unfortunately, we've got state of our accounts for the government. It's just not good enough.
Can you tell us a little bit about that?
Hey, well, what we've seen with the economy and what's happened, most of the borrowing has occurred during COVID, but not all of it. So what we've seen, the New Zealand's country debt, this is now the new measure, because now we bring in superannuation, which is a $60 billion fund. That's now been taken off our debt figure, which of course will never be used to repay our debt. No. But Mr. Robertson brought in this new measure to apparently bring us in line with international benchmarks. But using that new benchmark, our debt has basically gone from $5 billion 6 years ago to now over $100 billion. And so that's a dramatic increase in itself. But worse than that, what we're worried about is the economy is now underperforming. And we just had the government's accounts showing less than what was budgeted only a few months ago. And if we don't see the economy recovering quicker, we will end up having to borrow more money. Because if I give you this stat, over the last 3 years, and taking into account the current financial year's budget for this year we're in now, the government would have racked up $45 billion of operating losses. Now, take away the billion, just think about your own business. If you 45 million that you've lost in the last over 4 year period, or if you're a household, I've just lost 45,000. No one ever runs a government should run a government like that, but no one runs a business or family household like that. And one of the biggest issues we've got is we've got to get growth back into the economy, and so at least get to a stage where we're not burning these huge operating losses. We call them obligale, which is a technical term, but it's basically operating losses. And we, as a government, been running them for years now.
Right.
And so our first priority is to get ourselves back into surplus, to stop the hemorrhaging, because how do you fund a deficit? Well, you have to go and borrow money, don't you?
So what are the key thrusts of getting us back into surplus? And you mentioned a couple of minutes ago that the economy is underperforming.
Yeah.
So can you just tell us a little bit about that and how you generate surpluses in the future?
Well, look, at a very high level, the biggest issue with what's happening, apart from staff, and I bet you I've asked everyone in this room, what has been your biggest issue? It's been staff. It's moderating over the last 5 months, but actually in a worrying way. But the second thing is around how do you stop inflation? Inflation is the thief that takes your money out of your back pocket. And it doesn't matter, because every business will be borrowing money, probably against their house if you're a small business, and so everyone's paying far much more for their financing costs. So getting inflation, taming inflation. So we've said we're going to take the Reserve Bank back to a single remit, which is focus on getting inflation between 1% and 3%. And we have been out of the inflation ban, I now think, 28 quarters. We have never been in an inflation ban for quite some period of time. And so getting us back to a low inflation environment is really, really crucial. Dealing with regulations at a high level is one of the things. The impost on our farmers, for instance, it's just been massive. But every business, and I used to own a lot of businesses, every business is now just cascade of regulations, so difficult. So all those sort of things are sort of the high-level drivers, and then things like small business I can go into. There's some specific stuff, but we need to get the macro stuff right. Taming inflation, controlling government spending, getting ourselves back into a surplus, and then dealing with the whole thing about regulation, empowering and basically allowing businesses to flourish. We want you to get on and grow. And the trouble is, over the last 6 years, all we've talked about is, people paying too much tax rather than being actually keen and actually celebrating the fact that people are paying a lot of tax and making money, because, by the way, they employ a lot of people and generate a lot of stuff. It's actually not a bad thing. We actually need more people making more money in New Zealand, and rather than this policy of envy or politics of envy.
Yes.
But also about government spending. We've just been so poor at spending money and not actually delivering any income or any real-term benefits or even big capital projects. You know, why haven't we've blown probably 25 billion during COVID. If we had spent 13 billion building the new harbour crossing over the Auckland Harbour Bridge and put 6 billion towards addressing the roading shortages in Wellington, which will deal with their next 30-year plan, hey, we're only at 18 billion, right? We could do a few more roads. We could do some electrification of rail units. We could be doing some new hospitals. You know, the new hospital in Dunedin's 1.4 billion. We could be spending a few more on hospitals. What about some new schools? That's what we should have been spending with the 25 billion. Instead, we've just put it and blown it into the ether.
Right. Yeah. So when, from our point of view as accountants, the support that government did give during the COVID period was pretty important in that it kept a lot of businesses viable and going. Do you think that you're indicating that perhaps there's some wastage there as well?
So during COVID, the government spent 60 billion. We would have spent the 25 billion on the wage support subsidy. That was a good program. I actually argued at the time, because I had the finance role, that the government should also be extending support to businesses, small businesses, for rental subsidy, because there's this presumption that every landlord in the country is wealthy and they were good for it and they were going to save their small business. Well, in most cases they were very generous, but a lot of cases they weren't. So I could imagine that we would have spent probably 35 billion. So this is the missing 25 billion I was talking about. And I actually had a list of 150 projects that if I went through with you and said, oh, we spent money on this during that COVID period, you would have said, what? And so that was what happened during the COVID, the 25 billion. But what has actually happened, Mr. Robertson hasn't kept to one of his operating budget caps or budgets over the last 6 years. He's always kept spending more than what he allocates in the budget.
Right.
And so this level of spending, if that spending had been high quality and leading to big significant income outcomes from New Zealand, then I think all of us would be sitting here saying he did a great job. But you can't look at anything round. What are our roads in better state? Well, actually, no, they're not. Have you built more hospitals? Well, actually, it took them 6 years to sign off on the Dunedin hospital build, which has just started. It's going to be the biggest hospital build in the country. But we actually agreed. When we were in government last, actually signed off on the first business case for it. We got any more hospitals to show for it? What have we done around schools? Done a little bit, but nothing substantive. You know, what were the big changes? We just haven't seen them. That's a lost opportunity, and of course what we've done is geared the country up even more, which means the ability to give more tax cuts, to invest more in infrastructure becomes even more constrained.
Right. So if you get in government, you know, how quickly could we start to see some green shoots of change, particularly around the investment area?
Well, the first thing is we've got to give people hope. We're actually got to give people hope. We like what you do. We think you do a good job, and we want you to do more of it. And particularly if you're a business person, but you know we've got not-for-profit sector and all that sort of stuff. But if we're going back to the drivers of growth, that's essentially New Zealand businesses, small businesses. 97% of businesses in New Zealand employ 20 or fewer people. So what I might get into some specifics around that. So the first thing is we can try and get the economy growing, and that, you know, I've talked about the high levers around that, what we'll be focusing on. But what we want to do with small businesses is first of all access the talent. We will make sure that we're allowing the right immigration in New Zealand. At the moment, we're allowing a lot of people coming to New Zealand that have not been properly screened. It's only happened in the last 5 months because the government woke up to it was becoming a political issue. We want to see high quality, high skilled people coming into New Zealand, and we want to see them going into businesses to support them in the right way. We also want to attract more foreign capital into New Zealand, and along with it, highly skilled people. Talk about the rocket industry. We've talked about more renewable energy in New Zealand. We need to bring in skill sets into that, and we need to be fast-tracking those types of skill sets. We will get rid of a lot of the employment law that we think has become an encumbrance. Fair pay agreements we're not going to do. We're going to return back to allowing small business to take on people for trial periods. We're going to reduce some of the complexity around employment dispute, which is a big issue for businesses. So access to talent's number one. Just on tax, I want to be very, very keen to help simplify some of the tax arrangements for small businesses. So a real bugbear, for instance, is fringe benefit tax, particularly around the use of motorway cars. I want to do some changes around that. I think the issue around, I know you're an accountant, and that's why I'm talking about this. If you look at the accounts of most companies, they have pages of depreciation schedules. Why don't we just allow quick write-off of plant and equipment when it gets to a certain value, minimum value?
Right.
And one of the biggest things that, from a tax perspective, that we haven't announced, and we're waiting to see what the government's accounts is, but one of the biggest drivers of the economy would be to allow manufacturing businesses to write off plant and equipment in the year they acquire pieces of equipment, rather than depreciate it over 8 to 12 years.
Wow.
We haven't announced that because we want to see what happens after the election, but that would be a big driver. That's a massive driver because it deals with a shortage of labour, because people go up the value chain and driving more productive machinery, but actually the second thing is you're buying more productive machinery to try and deal with the productivity issue.
That's huge.
There's other things I want to do around tax, just basically simplifying. Why do we pay provisional tax on the 15th of January when everyone's on holiday? Why do you have to make your terminal tax payment in May rather than in July? Because by July, and I'm just looking at our tax lady here, you will have a much clearer view on what your terminal tax is, rather than having to make a flying leap at it in May. You know, small changes like that we can be looking at. So that's tax. The third thing, regulation, specifically, and I mentioned this before, I talked about triple CFA. I'm going to take that back to 2020 situation, because the issue we're worried about that is that has led to a lot of vulnerable people not being able to get access to credit, which of course affects businesses because of your customer-facing people. Many of your customers won't be able to get credit, right? So it's important we address that. AML is a major, if you're an accountant, which I know you are, lawyer, real estate agent, banker. I know we've got some bankers in here.
Finance company.
Finance companies, that bane of people's lives. I've had a working group on it for the last 10 months, and what we'd like to do is simplify that. And the basic principle is if Stephen has been checked and he owns his 3 houses and his 48 cars and he's got his boat in France, once he's been checked and that's true, why do we have to keep going back and checking that same process? Why can't we rely on some of that? And, you know, technology like blockchain and all that sort of stuff can play a part in that. So, and opening up into open banking, which is a concept most people are aware of, but providing that AML actually leads to that. The third thing is, in terms of regulation, is why do we keep asking small business owners the same information? You know, the address and all that sort of stuff. So one of the things I'd like to do is actually get IRD, ACC, Stats New Zealand, MB, and WorkSafe in a room and say, why don't you just ask the one piece of information and why can't you share it? And probably the person or the group that has most of that information is IRD. And why can't you just share it? And stop bugging you people as owners and sitting at 10 o'clock at night filling in forms. Right, so there's 3 examples around regulation. One is around better cash flow for businesses. We're going to continue the business guarantee scheme. But one of the more strategic stuff, and this comes under my commerce portfolio, I've been saying to the KiwiSaver providers, how can we get access to some of the 100 billion that we now have in KiwiSaver? And why can't we use some of that to invest in great New Zealand businesses? So, I've come out of the finance sector, and I look at it, we've got about 200 billion. We've got 60 billion with New Zealand Super, we've got 60 billion with ACC, and we've got this 100 billion with KiwiSaver. Most of us parked offshore in passive funds in some US stock market or European stock market. In any way to run a fund, most people, alternative asset class is a technical term, but between 5 to 10%. That, i.e., that means you would invest in stuff like great New Zealand businesses, right? And so I'm saying to the KiwiSaver providers, I will remove any perceived legislative restraint or way the FMA is looking at the way you have to disclose fees or whatever. I want to encourage some of that money, and even if it's $10 billion, which is quite a lot of money, I would like to encourage them to spend it and invest it in great New Zealand businesses. Why shouldn't we be supporting great New Zealand businesses, especially when many of them are world leaders? And so that package, and also I'm looking at how we can start accessing other debt stuff, and I talked about open banking, but I think there are other options as well. So getting capital is a crucial requirement. The digitisation is another big issue, and you probably know this with your clients. MIB and Xero both written reports saying that New Zealand businesses in the main don't use all their digital skills, don't even use their accounting package well, right? And there's huge upside, and some estimated $8 billion. Even if we got half of that, would be fantastic. So how we work with the sector, small business sector managers and their staff and owners to embrace digitisation, I think, is crucial. And the last one is mental health. We're going to have our first, New Zealand's first mental health spokesperson if we win the election next week or end of this week. And so one of the things I've been talking to Matt Ducey about is how do we access or provide access for small businesses to get access to mental health services. If you're a large business, you can have ERP systems and all that sort of stuff. You can have that sort of on hand. But it's the small businesses we want to try and provide access to services. And of course, it's not always the extreme, you have to have someone there at your side. People go through different stages of mental health. And that graduated approach, we're looking at a model where we use third-party providers to do that. But increasingly we need to make sure our workforce is not only physically safe, but mentally fit as well. So, there's some issues and some examples specifically around small businesses.
Yeah, you're right. Mental health has become more and more on our radar screen as accountants over the last 10 years, 15 years, as compared to what it was back in the 70s and 80s. It didn't even register anymore.
Well, people didn't talk about it.
They didn't talk about it at all. But I think it's also more prevalent nowadays.
Yeah.
And why, I'm not quite sure. So yeah, any help in that area, particularly for business, because our small business, we get it all the time. Where a small business manager is suffering from anxiety or depression, and it is affecting their business, but there's not many places they can go to actually get help, and if they do go somewhere, it's quite expensive.
Yeah, well, that's right. The COVID's led to some of that for sure, but the resilience, because it's just life's been tough for a long time now. Nothing worse than financial stress.
No, it makes it worse.
That's the real driver of a lot of stress, isn't it?
Yep. So just getting inflation under control. I mean, all the reserve banks around the world use interest to actually try and control inflation. Do you see any other tools available?
Yeah. Well, there's two tools. There's monetary policy and prudential policy that the Reserve Bank can employ. Sorry, I'm being technical. So monetary policy obviously is the key lever is interest rates. Prudential policies are the capital requirements they put on our banking friends over here. And just an aside, I am concerned, and we are concerned, that we've seen money go out of the productive sector of New Zealand in terms of financing. And what I mean by that is I mean our farmers, our small businesses, and also for our construction people. We really should be funding property developments. When you go into downturns, exactly the time when you should be investing in property, not when your market's rocketing like that. This is where we're so silly. And we've seen a lot of that money go into the unproductive sector, which is allowing people and funding people to buy houses.
Right.
So that's the role of the Reserve Bank. And different banks around the world, Reserve Bank or Federal Reserve banks, take a different approach. But that's quite an issue. But those are the two tools, and the Reserve Bank put on LVRs, and they're now talking debt to income as a capability to try and slow down the housing market. So that's the domain of the Reserve Bank. On the other side, and this goes tandem with that, is the role of what government does, which is called fiscal policy, which is, are you spending within your limits? And are you doing good quality spending? And where we've been totally out of kilter, we've had the Reserve Bank go and issue $50-60 billion worth of bonds, which has now got a loss of about $10 billion on the books and growing, depending on what happens to our foreign exchange rate, who went out and over-egged the amount of debt they've taken on board, basically to put more money back into the banking sector, which in hindsight they didn't need. And then at the same time, we've had a government that's just spent like billio. And when you've got loose monetary policy and you've got loose fiscal policy, there's only one outcome, and that's inflation.
Yes, you're right.
And so pulling fiscal back, it doesn't mean you have to be mean. It means you have to be much more careful about where you're spending money and get better value out of it. That's what we're talking about. But also there's a role for the Reserve Bank and to unwind some of those positions over time.